Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at gold, and gold prices took a bit of a nosedive on Friday. Recall shortly after the Fed announcement, Fed statement, Fed press conference, gold really held its own considering the fact that it was an expected bid to the dollar coming, expected change and more aggressive hawkish Fed policy. We didn't really see gold prices fall out of bed, at least not until after a delayed sort of reaction, and we did. We saw it break through key levels. We traded down at 1277, so we're looking at about a $36 range over the last 2 days, and that is really going to, start to build up some momentum unless we can find some buyers. And right now, the dollar is the key to this move. We saw the dollar trade up after the Fed meeting. We've seen the dollar trending higher for some time, whether it's a combination of dollar strength and other dollar or other non-dollar currency weakness. It doesn't matter how it started, but all we know now is that we're seeing massive bids to the dollar, and we're seeing other European currencies getting crushed here, basically at opposite ends of the monetary spectrum, as we should put it, where the Fed is actually acting and raising rates and removing stimulus while others are still talking about it. And the reality is, what we heard from the ECB this week, it doesn't look like it's a whole lot of reality trade that we're hearing from them, given the state of their economy and how they want to remove stimulus and raise rates over some point over the next year or so. But right now, the dollar is really contributing to the gold sell-off. How much will it contribute at what point? I think it comes down to the speculators, who have very smartly and rightly kept their hands off the buy button, at least until we saw things shake out. I recall we saw gold prices rally or push up a little bit north of the 1300 level prior to the FOMC. I would have gathered that would have been speculators getting in, maybe looking for a quick bid if they come in on the dovish side, but we didn't see that. And right now, with the speculators still on the sidelines, gold prices have fallen pretty significantly. I don't see key support until we get down to about 1260. That's a long way from where we are just north of 1280 right now in the August contract. However, gold moves very emotionally, and if the dollar continues to trend higher, and if we keep hearing bad news overseas, that 1260 level could be very attainable just based on a dollar trade in the short term. So right now, I think speculators want to wait and see where the dust settles between the relationship between the gold and the dollar, something that doesn't always move in tandem. We have seen it move kind of in two separate paths, and then they come back together. This is one of those times it's come back together, but with a hawkish Fed who wants to raise rates more aggressively than previously thought, with a dollar that's bidding, which really started on a whim and now is really taken off. These are two things that are going to be the thorn in the side of gold, and right now gold buyers are going to wait and see what happens. I think 1260 is your next buy level, but that is not going to happen over the next day or so. We'll have to watch it from here. This is Todd Colvin coming to you from the floor of the CME Group.